This is the Friday, March 16th, 2018 version of the Market Plus segment. Joining us now is Brian Roach. Brian, welcome back.
Thank you.
Brian, let's start out here with some social media questions because we didn't get to that during the main program. We're going to start here with Phil in Dresden, Ontario, Canada at Agrodome, and his is a little bit of a marathon of a question, okay? So we might have to break this down in a couple parts.
Okay.
He wants to know, with December corn at $4.05, what does the seasonal path forward look like for this contract? What are the calendar dates based on history we should dial in? And finally, what standing order price levels need to be made?
Well, I mean, most of the history is going to tell you the seasonal strength is going to come between March and July. And so if you're looking for some sort of a target pricing program, I have a hard time putting target prices in because it depends on the weather, the planting start, the type of stand we get in large parts of the Midwest. But I would look for, you know, our system, we have an oscillator that looks for price peaks. And when we have a handshake with some of these key market indicators that we use and we rely on, the more of those that are lined up, the better we feel that sale is going to look in the rearview mirror. So I'd say if we get up into the high teens, 418 to 420, that's probably a good place to look. We've been, what, 410,
yeah, I
411.
think we flirted with 412 this week.
Yeah, already. So these are already, you know, not far. When you start to put price points in, sometimes that could be close enough. But I would say on another rally up on more weather problems in Argentina, we could probably see that. But the idea is to stay with it through from now on to into July. Make sure that if you're marketing corn, that you're actually a counter trend seller as a farmer. And that's really a bigger part of the attitude that you have to have, as opposed to, and specifically in what month and at what price level.
Okay. We're going to take one other social media question here about corn, and it's Jay in Paulina, Iowa. Wants to know, how tenuous is the situation between the former NAFTA partners as it pertains to corn exports, and what should farmers be watching?
Well, I think that what we're trying to do is bring everybody to the table and find some sort of middle ground. If you talk to the Mexican end user, they don't want a trade war. If you talk to the Canadian importer, they don't want one either. The logistics and the infrastructure is all set up to deliver across the borders very efficiently. And so I look at that as really what we have to do is figure out how to come up with common ground items, make some sort of concession, but there's also give backs. I think that we're probably tenuous here, but what I'm thinking is it'll just take a lot longer to come up with what those things look like. I don't think that's a near-term solution or near-term policy that we're going to see answers on. That's my opinion. Okay.
And I guess going off of that a little bit, if we were to pull out of NAFTA, we've seen such strong export numbers in corn. How much are we going to drop from that? Are we going to feel those effects right away?
Well, it depends on how fast Mexico could resupply themselves from elsewhere.
And we know they've been looking.
We know they, anybody in their situation would be doing what they're doing. But the issue is that we've got a smaller Argentine crop to lean on. It's not all going to be able to. They're not going to get all that from Brazil. Mexico and Japan have both bought a large amount of export sales that are not shipped at this point. Actually, a very alarmingly high amount of unshipped bushels to both countries. And so I would imagine some of that has to do with this trade discussion. But I think that the option to fill in as many bushels as they buy from the U.S., that's not feasible very quickly.
Okay.
And so I think that we'll have to figure out how to get both sides of the table happy.
Definitely.
And that's very difficult to tell where exactly that's going to go. So I think the shipment number in corn to Mexico is something to watch.
Okay.
What we're actually shipping to them, not just selling.
Okay. Let's take another social media question here. Nathan in Inwood, Iowa would like to know, meal and corn have shown strength while lean hogs have waned in the last few weeks. What should we anticipate going into those summer months, increasing or decreasing margins for the hog producer?
Well, the hog producer is going to be up against higher cost of gain. You know, higher meal prices, higher corn prices, and maybe, and I don't know that changes a whole lot between now and midsummer. on the futures cash side, you know, we typically do rally into mid-year with that correctional period in April. That is kind of, we're not sure. Last year we had a correction on into April. I don't know if we see something counter to that this year or not. So I would expect that board prices, cash prices in the mid-year look stronger than they do today. But we have big inventories, and so that's going to continually be it's going to be a negative. And I don't know that this problem in Brazil is going to relax meal prices as much as we saw last year heading into the U.S. growing season. So I think that keeps meal prices from seeing the kind of correction that we've seen historically going into the U.S. growing season. However, if we see big bean acres in the U.S., then we have a lot of downside coming in bean prices so long as the crop gets planted. So at the end of the month, we're going to get a planting intentions report, right? And that'll be as of March 1st. And the soybean to corn ratio on March 1st really would say beans look pretty strong, cotton looks pretty strong. And so if that were to happen, bean ending stocks this fall could look very burdensome, more burdensome than they do today. And I think that will help shore up some of this price problem on meal to our hog question here.
And talking about planting intentions, that report does come out at the end of the month. What are you anticipating for that report?
Well, I expect corn numbers to be 90 million or smaller. Okay. And I would expect, we've talked about this a little bit already, but cotton acres and bean acres hunt here, especially in the Mid-South. So I don't, it's hard to predict exactly what farmers told the USDA as of March 1st, but I do think that the prices would dictate that we do get strong bean acres, we do get strong cotton acres, and those probably come from corn. So it might be hard to get that 90 million acre corn number, but really what will matter is what the weather does, and that could be plus or minus 500,000 to 1 million depending on how the weather plays out.
I guess a follow-up to that too, I know some analysts hold the USDA's reports with a little more weight than others. When you look at the planting intentions report, how much weight do you give to what the USDA projects?
Well, typically it's just a few days worth.
Okay.
Okay, so if it's a big reaction, there'll be a reaction to it, and because on that same day we'll get a stocks update, and the stocks update could be friendly on the corn but negative on the corn acres, and same thing on soybeans. So I think corn acres will probably look, the stocks report will probably play friendly because we've had such good usage. We've got big animal numbers. Ethanol numbers have been very strong. And so I think that report, typically it's a big report. We've got prices way up, and so we could take we could see a pretty big correction. Okay.
Really quick here, I want to end on soybean crush. We had a record number last year for February. Where do you see us going from off of that?
Well, we were above the expectation this past week here in U.S. crush. And so we're pushing crush numbers. I think that Argentina's failure in the bean market that's tied to their meal shipments, we'll continue to see their meal shipments cut back, and the U.S. will fill that in. And so the 1.4 to 1.5 million ton higher crush number out of the U.S. will probably be bigger before it's all said and done. And so we'll need to continue to run these processing crush plants at full capacity on into mid-year just to shore up that gap. That's kind of what I'm thinking.
Okay. Is there really much more capacity that we can crush, or are we kind of at that maximum level for what we have processing-wise right now?
Well, it depends. You really have to look at plant maintenance, downtime, shutdowns. I would say that there's probably always a little more upside in a manufacturing plant when it says it's running at capacity, but if you make a few adjustments, it gets a little more. And always companies are looking at how to optimize yield with better equipment, capital expenditures, etc. So, but we know that we're running at a pretty high utilization level, so we'll continue to push that.
Okay. Brian Roach, thank you so much.
Thank you.
It's fundraising time for PBS stations. If you find value in our programs, please consider making an investment in a service that provides you with the news and market analysis you've come to know and trust. Join us again next week when we'll examine how NAFTA has failed one sector of the agricultural economy, and Naomi Bloom will sit across from me at the Market to Market table. So until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.